Hello friends, this is Raj Sastry from Raj Option Trading. Today is November 3rd, 2021. I want to talk about Ocular Therapeutix, ticker symbol OCUL. It's a biotechnology company focusing on eye care. So let's jump in and look at this company in a little more detail. So it's a visionary company. Visionary, get it? They're into ophthalmology and making sure your eyes are doing well. As you all know, eye care is a secular trend. Lot of people are in the older generation of late and they need a lot of care when it comes to the eye. So this company is pioneering the drug delivery in ophthalmology and making sure your eyes are very well functioning. They have a lot of pipeline candidates and also transformational drugs to enhance people's lives. So with that, let's jump in here and get started. We'll look at company overview and look at the major exchange traded funds holding Ocular and look at the competitive landscape and see what competitors are doing and how their stock is doing, and look at few charts here and understand how are the competitor doing here, and look at the financial summary and look at the performance of the stock over the period of time, and finally the final verdict to say if the stock is good to buy here or should we hold on. With that, let's jump in here and look at the pipeline. From a pipeline perspective, Ocular Therapeutix, great vision care company here. They got multiple pipeline candidates here. For the retina, they got OTX TKI here, and it's in the phase 1 right now. And for glaucoma, they got OTX TIC again, phase 1, and they got various other ocular surface diseases here. They are a little more progressed, as you can see here, in phase 2, and they got few more here with the regulatory approval with the here Dex Tenza, with these two here, allergy and post-surgical, and even ratio also, regulatory approval is all done. So we can look at these candidates here. I think from a pipeline perspective, it's not a one-trick pony. They got money generating indications here and the drugs, and they're working on good amount of drugs here in the pipeline. So that makes this a good candidate to look at and analyze and see if we can get into this company and buy some of its stock. As you look through here from a global market perspective, we got retinal diseases with a $13 billion market potential here, and we got here glaucoma with the $4.8 billion potential, and we got two more here with the efficacy here, surface diseases and surgical with nice potential here. So this company is really scratching the surface here. They are nowhere near capturing all the market cap here. That's why the addressable market is huge here, and companies going after its addressable market, trying to get a good chunk of it. And as you look through here from a company context perspective, it's a biopharma company, focuses on formulation, development, and commercialization of therapies for your eye. As you look through here, they got the ratio here, one of the drug here. It's an ophthalmological device designed to prevent wound leaks in incisions following the cataract surgery. As you all know, cataract surgery is very, very, very common here, and this device can really help. As you look through here, very low dollar stock here, just $7.08, and market cap is also pretty low here, 542.20. As you look through the stock chart here, it's a 3-year weekly chart here. They've done great. As you can see, they've done very nicely. Looks like it's a good swing here with the back in 2020 here. And as you look through here, it has come down drastically, and they had a big red candle here, big down day, and then as you can see here, it's actually down week, and now it's stabilizing. So we should be asking the question: is it a good time to buy now? Given stock has a great run, came down, now stabilizing. As you look through, your volume is pretty good here. And if you look through analysts, what analysts are saying, Analysts are saying strong buy with the four analysts buy rating here with a strong buy. So that's why it's intriguing. You should take a look at this company and see if you can make some money with this company here, given stock is fallen out of the grace here. As you look through news here, we got few news items going on here. Here Zacks is wondering if the earnings is going to go down here, and hedge funds are crazy about this company according to Insider Monkey here. And they're also working with multiple other companies and collaborating. So with that, I feel like this is a good time to buy. Stock is pulled back pretty hard. It's a low dollar stock with a lot of great potential in the vision and the eye care market. That makes it a good candidate to deep dive and jump in. So with that, as you look through here, we got CEO here, Anthony. Anthony, as you look through here, or Tony, he's been chief exec since 2017. He has various experience in the relevant field here. He was a managing director before. He was with the Bristol Myers before, Novartis. Looks like the background itself checks out. He's a great guy. From an approval rating perspective, he's got just 67% approval rating, just a 9 rating. Not too many folks rated so far. I feel like this situation should improve going forward. Right now, a little bit low. I've seen approval ratings north of 80% in the past. That's where I want this to improve a little bit here. Given just 9 ratings, small company, that could be the reason for a low rating here. But regardless, I think we should cover this company and see its potential. So as you look through here, I always look at what big funds are doing. If you look at OCUL here, we got funds like pharmaceutical ETF with a nice chunk of allocation here. We got a couple more ETFs with the Nasdaq Pharmaceuticals, Raymond James, and Nasdaq Junior Biotech, all buying this company with a nice allocation percentage here. And if you look through funds here, they're spending or they're holding a lot of these shares here, 1.7 million shares here. And you can see IWO, nice chunk here. Look here, we got growth ETF, we got total market, pharmaceutical, microcap. All of these ETFs are holding a good chunk of Ocular share here. That's why I feel like these companies, these are big mutual fund companies and ETFs, so they are betting on this company. That makes it an ideal candidate for us to jump in and deep dive into this company here. And as you look through here, we got a few of these ETFs hold, we got all the healthcare ETFs here with ARC here, Genomic Revolution, IBB, XBI. Generally, as you look through here, all these healthcare ETFs have done nicely in 1 year, 5 year, 10 year. So this company here, Ocular, is playing into some of these ETFs here. That's why it's good to look at this company and see if you can really take advantage of temporary weakness in this company here and accumulate. So with that, as you look through here, Ocular Therapeutix and its peers or competitors. Keep looking here. We got Ocugen at the top here. This has been in a short squeeze, as you can see here. I've been taking some money off the table very slowly. RSI is 80. It's hitting the roof here. Doing great here with this short squeeze. As you see here, still there is a 29% short here on Ocugen. It's having nice rally here. And we got few more here, CLSD, eyes, which is second eyesight, and so on and so forth. Keep watching the RSI levels. You could still buy candidates like CLSD, eyes with a low RSI here, and whereas EyePoint and ISEE are a little high here. I would wait for a little pullback and keep looking here. We got Outlook and AMPE with the low RSI. You could still get in on this one here and take advantage, and few more here with the Mgtx and so on and so forth. A little bit high RSI here. You could still buy NNVC here, little company with the very low market cap, 60 million. You could still buy that little bit lower RSI, which is just 56 here. but others are a little expensive for me. I love ALC here. It's a great rocket ship here. You could buy that on a weekday and take it from there. And look here, we got Aerie and Glaukos. Both are great stocks here. I typically like Glaukos, which is has come down pretty significantly here. You could buy this one here. Aerie is also a great one here. Look, nice sales growth here, nice gross margin. Right now RSI is 43. Stock has made some move here with the Aerie. You could wait a little bit for a little pullback here. You could even still buy here with the low RSI, but I would wait for a small pullback and then buy. And then we got few more here with low RSI like AGTC, Kala. Kala is one of my favorite here. Low dollar stock. You could buy this and hold for a while. They got a they're doing good progress here. And we got Gray here. Gray also low RSI stock is making a move on the positive side. You could still get in on this one here. So with that, today we are looking at Oculus here. Oculus Therapeutix, as you can see here, it's around $7 here. Nice sales growth. Keep watching sales growth, gross margin, and even quarter-over-quarter sales growth, all positive. Companies losing money right now, which is understandable for these early stage biotech type companies here. The debt to equity ratio is not too high, 0.7, still manageable, low RSI, and it's been having some weakness, as you can see here. Still managed to have 23% in 5 years, down 71%. That's why I think it's an intriguing candidate here. We should look at this company. I personally like this company at these levels here. Accumulating slowly. Let's jump in and see if it's worth buying here. So with that, as you look through the competitive landscape here, we got Ocugen here. Ocugen is having great rally, as you can see here. Company shooting to the sky, as to say. Keep watching here, Ocugen. We got RSI level 80 tells you stock is really overbought here. We should apply some caution. Great rally here. 1 day, 5 day, 10 day, 1 month. Great rally here. 1 year, 5,000% performance here. I think overall Ocugen is a great stock, but right now time is not right. I would wait for a little pullback and then buy Ocugen. As you can see here, it goes up and comes down nicely, goes up, comes down. Right now it went up here. We should wait for a little pullback here. And then you got ISEE here, nice ticker symbol ISEE. It's a vision care company. As you can see here, this also has gone up nicely. So as you look through ISEE here, RSI 60, you could moderately buy here, or I would rather wait for a little pullback here. Keep watching on the balance volume. It's doing great, just like Ocugen here. I would probably wait for a little pullback here. RSI level is a little high. But stock is still a very low price. You could still buy here. I would rather wait for a little pullback here. And then we got EyeSight here. As you see here, we got a second sight, or EYES. And stock is actually struggling a little bit, as you can see here. On the balance volume is pretty steady. EyeSight has got a RSI, second sight has got a RSI of 42 here. It's turning around, so I would buy second eye here, given stock is kind of in the trading range here. And as you see here, on the balance volume is rising. I would be buying second sight here. Very low price stock, as you can see here, has done great, 282% in 1 year. So I would be a buyer of this one also here. And then you got Outlook here. Outlook is also trying to search for direction. As you can see here, it's in the trading range. RSI is 42. There is a nice on the balance volume indicating smart money is buying this stock here. I would be a buyer of Outlook at this level here. As you can see, stock is trying to turn around, as you see here. So that's a good one here. Very low dollar stock. I know many of you want to focus on low dollar stock because there is a nice outsized return in these stocks. So with that, in a nutshell here, Ocugen, ISEE, wait a little bit, let them cool off. EyeSight and Outlook, second sight and Outlook, you could still buy because they got low RSI here. and stocks have been trying to make a move here in the near term. So with that, let's jump in, look at next set here. We got AMPE here. As we look through here, this one also is in the trading range right now, trying to search for direction. On the balance volume is pretty steady, as you can see here. And as you scan through here, AMPE, very low dollar stock, just $1.56. Market cap is also not very high, and stock is trying to make a move. As you can see here, in the near term it's increasing a little bit, nice performance. This also makes it an ideal candidate. We should look at and buy this stock here when it's relatively low here. And then we got Mgtx here. As you look through here, RSI is Mgtx RSI is 69. This one, as you see here, it has made a move here. I would wait for a little pullback here. No need to buy at these levels. Wait for a little pullback and then buy. Nice on the balance volume. It's trying to decide where to go now. And then we got ALC, great stock here. ALC, as you see here, RSI 65, a little bit high for me. But if you're a long-term investor, you could buy some ALC and sock it away. If you want to do some trading here, I would wait for a little bit better entry here. This will always come down a little bit like it had done in the past. I would wait a little bit. And then we got ALDX here. As you scan through, RSI a little high for me. I would wait for a little pullback here and then buy. And also ALDX has made a nice move in last 5 days. It's okay to wait for a little pullback, or if you want to buy a little bit, you can buy here given it's a little bit off of its 52-week high by 45%. I typically wait for a little pullback and then buy these type of stocks here. It's a low dollar stock. You could jump in and buy a little bit here also. So with that, let's look at a few more here. We got Aerie, as you see here. Aerie is a low $11 stock here, as you see here. Nice sales growth, nice gross margin, and RSI is very low here. I would be a buyer of Aerie here. It's trying to make a nice move here when it comes to on the balance volume, and stock is also rebounding, as you see here. It's done some good move here. Still 46% off of its 52-week high here. So you should buy this on down days and accumulate. And then we got here Glaukos, great stock here. As you look through here, Glaukos, we got here $45 stock, and its RSI is 48. Stock has been down for a long time here, trying to bounce in the last 5 days. I would be a buyer of Glaukos here. Great stock here. You can buy and sock it away. These guys will do great. And then you got the stock that we are talking about here, Ocular. Ocular, as you can see, a stock has been making steady down moves and a gap down, as you can see here. Earnings is coming up pretty soon here, 11.8, and on the balance volume is pretty down here. Right now it's in a ugly chart territory here. Chart itself looks ugly. So you got to have some conviction and belief in that company, and should be doing some fundamentals before you buy this. That's why I like many times when the chart is so ugly, folks are really discouraged to buy. But as you look through the company here, Ocular, it's doing some great progress in sales 1 year, quarter over quarter, nice gross margin. Company down of late, RSI is 33, indicates stock is sold off. That's when you look at the pipeline, look at the fundamentals, and put some money to work here when there is a blood in the market. And then we got EYE here. EY is National Vision, a little bit bigger company, as you can see here, $5 billion market cap, nice sales growth, nice gross margin, as you can see here, a little bit higher debt ratio, which is manageable. RSI is a little high here because stock has made a move. On this one, I would wait for a little pullback. Given National Eye is almost at the 52-week high here, I would wait for a little pullback here and buy this company. So with that, let's jump in here and look at Ocular Therapeutix deep dive. So let's jump in here from a numbers perspective. As you see here, the company is not making money yet. Earnings per share is negative so far, as you can see here. I think which is okay for these early stage companies here. From a sales perspective, I like annual sales clip here. Look here, 4.2 million to 17 million in a nice 1 year here. That's a great clip here. Shares outstanding is growing a little bit. which is typically is a concern for me if the revenue is not growing. But in this case, revenue has a nice clip here, nicely growing here. That's why I'm not too much concerned about the shares outstanding here, which is manageable here. Look at the quarterly revenue. Company is doing nicely here. Nice quarterly revenue, even though it's off of a lower base, as you can see here, 6 mil, 7 mil. It's a lower base, but still the clip is nice. Trend is good, and they're also making gross profit, as you can see here. Nice gross profit, quarter over quarter perspective, and more importantly, they are spending money on R&D to perfect their product. I think that's a great one here. I love early stage companies spending money on R&D instead of suffocating their R&D division. That's a great one here. So with that, let's jump in here and look at Ocular Therapeutix and look at their stock price and market cap, and also look at how they're doing. I love to see these type of charts because it's not about how company is doing right now. It's about the trend, how they've been doing, what's the trend, what's the trajectory. That's why I love to see these type of chart all day long. So as you look through here, it was a $170 million company back in 2019. Right now, it's a $1 billion company. That's a almost more than 3, 4, 5, 6 times. So it's doing nicely. It's taking the market share. That's why Wall Street is really awarding this company with a nice market cap here. And look at the stock price here. It was $3.97 back in 2019. Nice $14 right now. So it's really clearly 4-5 bagger. And then you look through the sales here, pretty steady eddy here. It was a no sales back in 2019. Right now it's about $12 million in sales. Still early stage company. I like the trajectory here. It's been slowly but surely growing its revenue, or the top line as you say. And quarter over quarter sales change, as you can see here, it's pretty impressive, pretty nice here. Right now they are at 646%. Understandable, they're going with a lower revenue number, but still impressive number. They've been putting nice quarter over quarter sales change almost every quarter, as you can see here. Earnings per share is hovering between positive and negative right now, which is understandable. Early stage companies, they got to invest in their own company here. And then as you scan through here, they got a nice amount of cash. They're not going to run out of business here. That's a good one here. And as you look through here, total debt perspective, they got some debt which is completely manageable. As you can see here, I'm not concerned about the debt here with the debt to equity ratio of 0.7. As you look through here, they've been reducing their debt. It was 0.8. Now it is 0.7, and while ago it was 11. So it's trending in the right direction. That's why I think it's good here. And from a free cash flow perspective, it's negative here. I think they should improve this situation. Given it's an early stage company, it's understandable, but it's good to see if they can improve this cash position here. And nice gross margin, trending in the right direction. I like that. And operating margin is also trending in the right direction, more negative to less negative. And same story with the net margin. Actually, net margin is a little bit negative right now. I would want them to improve this situation here. R&D spend, nice spend here. They're doubling down on the R&D. That's always good for these early stage companies. And from a return on investment and equity perspective, they're trending in the right direction. It's becoming more negative to less negative. That's always good. And price to sales perspective, right now, they're pretty okay here. Valuation is not sky high, still a little high, but not sky high. So with that in a nutshell, I love what the company is doing. They're slowly but surely grabbing the market share, witnessed by this market cap improvement and also price increase all the way from $3.97 to $14. Now it's a little bit down here with $7. That's why it's very good to buy this company at these levels and take it from there. And if you look through here, quick earnings history here from Seeking Alpha, this company is not very predictable when it comes to earnings history. They've been missing a couple of times, as you can see here, either with the earnings per share or on the revenue side. Earnings per share is more prelevant here they've missed many times, and revenue they've missed couple of times. That's why it's not very predictable, but I would buy this on a on weakness here and then wait. Typically you'll get a nice upswing here as we go forward, but in no shape or no means this company is predictable when it comes to earnings history. That's the reason for stock going up and down, especially when they announce a bad quarter. Stock seems to be going down here, but the company has got a lot of things going for it with nice pipeline and a lot of drug in the pipeline. So with that, as we look through here with the quarterly earnings report here, we got CEO Tony here. He had been talking about hey, how great is the company. They're building this ophthalmology company here with the potential to transform eye diseases everywhere. And they got various things going on. They got development programs in wet AMD. They got here one more indication here, OTX here, a glaucoma indication here. Overall, they seem to be having multiple of these candidates here doing pretty well. And they got your Dextenza here. They're fulfilling the physician and patient desires, and they got this drop-free solution here. And they also have novel dosage forms here, and they are looking at multiple patents here. They got patent product protected till 2030, 2040, long runway here before generics catch up here. That's why I think it's a good company here with a lot of these drugs with long patent protection here till at least a couple quarters down the line, couple decades. And if you look to the financial highlight here, they had nice increase, 631% revenue. That's a great increase here. And as you look through here, company has 76.7 shares outstanding, and they got nice amount of money or cash in their balance sheet, and in no way company is in trouble from a financial perspective. So with that in a nutshell, from a earnings report perspective, you can see here company has got some nice candidates here from a pipeline perspective. They also have 2 drugs in the market. They seem to be doing very well. So next, let's jump in here and look at the performance over years, months, quarters, and so on and so forth. As you look through here, by looking at this company right now, you could see here more red than green. So clearly this company is not for any weak hearts here. You should have some conviction about the company and their drug. And the key is to buy this company when they're down like this and keep accumulating. Don't buy at the top here. 2020, look at the performance, nice, 424%. It's been dropping off badly from 2015 to 2019. Has done pretty okay. So at this time, because company doing great, they got some indications here. You could slowly accumulate on down days and take it from there. When the stock goes higher, stay back and don't accumulate it at the time. So that's why I feel intriguing to buy these type of companies on the down days. Still, there's a good promise of the future. And as you look through here, Ocular from a monthly performance perspective, look here, nice down months here. All the way from May to October, they've been going down, down, and down. Now they're trying to improve here. That's why there's an uptick here. Typically, I like to invest as there is a small uptick, then slowly accumulate. As you see here, more reds than greens, but many times when there is a red here, it's followed by a nice upswing here. That's why this time there is a big red in a couple of months here. There's a small upswing. This can continue. Earnings is coming next week or so. That's why you got to watch this one here and slowly accumulate. This can go higher after the earning. There is a good potential for this to go higher. And as you look through here on a weekly performance, more red than green. And stock has been taking a beating of late. As you can see here, 38% drop, 3% drop, and so on and so forth. That makes it a good candidate to slowly invest. As you all know, eye care is very important and it's a secular growth type area. On a daily performance here, as you look through here, we got more reds here, 36% drop on 22nd of October with a good chunk of volume here. Right now, as you see here, stock has been going a little bit higher, and the volume is also not too bad. It went up with a 1.2 million volume here, and yesterday also it it went up, actually went down a little bit, but as you can see here, it's trying to make some progress here, even though on a yearly basis it's down 65%. As you look through monthly and weekly and daily, there is some green shoot in the near term here. That's why I like to invest in companies like Oculus as they make some progress and try to turn around here. So with that, let's jump in here, look at the matrix. I love to look at these type of matrix all day long. So as you look through here, we got multiple years here, 2021 all the way to 2014, and we got months here. This typically gives a good idea of the trends here. As you look through here, by looking at a cursory look, you can say around September time frame, companies typically undergo some weakness here, witnessed by drop in September months here. Then you can see July is also a little bit weaker month here with the good drop in July. As you look through here, then we got as you see here, January can be a little bit downer type month here. But now we are in October. October stock is dropped here. It's been dropping for a while here. Now there's a bounce. Keep watching here. Typically October company has done nicely by looking through this year, and November, November I think it has done nicely, and December it can do okay in December. So that's why with this big drop all the way from May to October, now with the uptick here, this could be a good time to buy and wait for a nice pullback here. So with that, let's jump in here and look at few stock charts. As you look through Oculus here, stock has done great in the past year. It's a 5-year weekly chart. As you can see here, it had a huge surge here, as you can see, then came back promptly here. Right now it's trying to decide where to go. It's in the consolidation mode here. That makes it an ideal candidate for us to jump in and investigate further and see if it's worth our money at these levels. And let's look at a little more smaller time frame here. This is a 1-year 1-day chart. As you look through here, stock has been a big gap down here. Earnings is coming up next week here. This makes it a nice candidate for us to accumulate before the earnings. Typically when the company drops big time before the earnings typically don't disappoint that much, given company is doing still nicely. RSI is very low right now. Right now it's trying to go a little higher, as you can see here. That makes it good candidate from a timing perspective. As you look through here, IV percentile is 53, little bit high. That's why probably not a good time to buy call option here. Earnings is around the corner. IV percentile is high. You're paying a little more for the call option. That's why I would buy stock outright here. It's a low dollar stock, just $7 here. And from a DMI perspective, which is one of my favorite indicator, a red line on top, green line on the bottom. Red line is trying to come down or even flat to down a little bit. That indicates from a direction perspective, even though it's bearish at this time, at least the lines are trending in the right direction. Red trying to go down here, and the blue trying to stabilize. And from a volume and the check-in money perspective, after this big drop, typically on the balance volume comes down, as you can see here. Right now it's stabilizing. Check-in money flow is also stabilizing, trying to go a little higher. With this big drop here, the chart looks ugly, trying to stabilize at this time. With that, by looking at this chart, I think it's a good time to buy Ocular. With this huge drop, earnings coming, company doing good, couple of great candidates in the pipeline. That could be a good time to buy this company here. And then let's look at option statistics here, actually option chain here. From an option chain perspective, stock is at $7. All-time high is 52-week high is 24. It's got a good runway, as you can see here. And look at $7 here, and strike price 7. Keep watching the open interest here. We got some open interest, but as you go down further, open interest keeps increasing. $9, 784. Then we got $10, again a huge number here, 284. Keep watching down here, $15. Somebody bought call option for $15. 1,262 contracts here at 20 cents or so. They're buying really out of the money options at a cheap price here, expecting stock will bounce back nicely. See here, we got high volume at $20 with the low price here. Folks are betting in the option market this will go higher. And the put side, as you can see here, keep watching the open interest. We do have some open interest, but nowhere near the call open interest here. So that tells you in the options market, people are betting this stock will go higher. That's why they're bulking up and buying contracts with the future or a out of the money out of the money type strike prices. So let's next look at option statistics here. The right now call contract is 38, put contract is 15. That tells you there are more people buying call contract. And look at the PC ratio or put call ratio, it's 0.39 here. Tells you it's a bullish territory here with more people betting the stock will go higher. And from a VWAP perspective, right now stock is at 7.02. This is, I think, a day old here with the stock price 708 with the VWAP at 702. That tells you there may be a little bit down pullback in the stock here. Stock might stabilize around 702 perspective in the near term. That's why you got to be buying the stock when it's really stabilizing and a little bit uptick after the big pullback. That gives you big bang for the buck here. As you look through here, we looked at the fundamentals, we looked at the technicals, we looked at the stock chart. Now we have to make a decision. What should we do? Should we buy Ocular Therapeutix or should we hold it? Should we sell it? So as you look through here, the total product revenue 11.7 million, nice 631% increase over the same period. And they got revenue from two products here. Dextenza, nice 11.1 million revenue here, 7x increase. I think that's a good one here. They also have some revenue from Resure here, 0.6 million. So they got two drugs in the market and they're doing well from a revenue perspective. They can grow these two drugs into bigger revenue generators. As you look through here, company has got nice money here, cash and balance sheet. That's always good here. It's a little bit down from last time, but still good amount of money. Company can really work through any downturn, temporary downturn. And they got multiple drugs in the pipeline for eye disease, wet AMD, glaucoma. So that's why it's pipeline is rich here. As we looked at, there are patents which are expiring in 2020, 2030. So it's a good one here from a pipeline perspective. And they also announced collaboration with the Mosaic Biosciences here. It's a step forward for the company. I love companies who are partnering and collaborating and really taking it forward. And with these research and by looking at the fundamentals, technicals, what company is doing, and how the company has pulled back nicely and now trying to go slowly higher and consolidating, I recommend accumulating this stock here, Ocular Therapeutix, on the down days and brace yourself for a nice bounce back here. With that, thank you very much. Happy investing and trading. Please subscribe.